Yo, yo, what is going on here? Give me one moment, guys. Okay. I'm not too sure what's going on with this, guys. Give me one sec. Right, guys. How's it going? How is everyone doing? We should be back now. We should be good to go. Right. Okay. I don't know what the fuck happened then, but we are good to go. Good morning, guys. How is everyone doing? Hope everyone's having an amazing day so far. Good morning. Good afternoon, Alex. Good morning, Humphreys. Hi, Abby. Hi, Scott. And hi, Dan. How's it all going? How is everyone doing? As you know, it's PPI day. Sorry about that little malfunction there. Don't know what was going on. But yeah, we should be good to go now. I think you can hear me. The mic is on. The screen is there, so it should be good to go. Let me know if there's any issues, guys. But yeah, we got the fundamentals here. As I said, it's PPI and stuff like that. We do have a little bit of news other than that, which has all been done. We've got nothing else to worry about for the day, so we are free to just look for those positions. But based on what I've looked at so far today, we haven't really got much to hope for. So I think it may end up just being a chill stream. But yeah, how's it going? Oh, wow. Let's look at gold then. Hi, Gustavo. Hi, Shalom. Dan, Magic City Trader. Good day to you too. Like up the stream if you're ready to learn something here, guys. Like up the stream if you're getting value from this. That's it, yeah. Just like up the stream. Now, there is one issue that, give me one moment. We are just consolidating down. We're going to look at gold now very, very quickly. Let's just do this. If we open up gold. Here we go. Right, let's see this. So, I did say in the stream yesterday that when gold comes up and takes this high, we will then come down straight off of it and we are bearish. Back down to the IRL, because what does price do, guys? It goes from ERL to IRL or ERL to ERL. It takes the highs, comes down to the fair value gaps, either respects them and continues the trend, or disrespects them and continues down to take the other side of ERL. Here you can see we are pushing down to this fair value gap. Let me just draw it out for you here. And it seems as if a few people have caught this move, which is great. Nice to be here. It's my first time live with you. Well, yeah, hope you learned something. I hope you get something from this stream. Full of value. If you want to learn more on this, just join the free course. It's in the free Discord as well. But yeah, happy to see you here. It's nice to see a few new people. But yeah, guys, on gold, as I said, what would happen? We come up, take the highs, then we retrace, come down to the IRL. That's what we're doing right now. We are coming down to the IRL, and we're either going to respect it and continue the trend, or disrespect it and come to the next form of ERL, which is this low over here. So we're going to see how that goes. But yeah, it looks like it's pushing down very, very strongly. We will look at NASDAQ soon as well. But I want to focus on the things that I trade first, which are Bitcoin, GJ, and gold. We are all red today, as you can see on the right-hand side. But let's just have a look at this. You can see the AMD playing out very, very clearly here. We have accumulated right here, and then we manipulated to the upside, took out this high, and then came down. This is exactly what I said would happen, guys. Now, we did get a more internal cycle to the downside first. As you can see, if we just zoom into this, you can see we had this more internal cycle right here with that manipulation to the downside, distribution to the upside. But on the 1 hour time frame, we've just accumulated here, then manipulated to the upside and distributed to the downside, exactly how I said we would. And why did I say we would do that? Well, if we look to the 4-hour time frame on GJ, you can see that we took the high, formed a fair value gap right here, come back, respected it, took the high again, and then formed or went to come back to the next imbalance, which is this one right here, and completely went straight through it. So what I said would happen. I said once we took the highs, we come to the imbalance. We took the highs. I expected price to retrace. What did it do? It retraced. It went all the way down to the next imbalance, disrespected the imbalance, and now it looks like it's coming to target the lows all the way down here, but it's just took out this low right here. If we just look at this one, it's just took out this one. So what I think will happen is we kind of consolidate around here. Looks like we're running out of energy. Then we'll have a valid fair value gap for prices to come back into, respect, and continue down. It's exactly how it works, guys. That's like all you need to understand is price takes highs, then comes to fair value gaps, respects them, continues, disrespects them, and continues to the other side of the range and changes the entire trend. And that's exactly what's going on here. We took the high, retraced to the imbalance, took the high again, retraced to the imbalance, took the high, inversed the imbalance, took the low, and that was AMD playing out. And if I just get rid of all this, just to clean things up a little tiny bit, we go back to the 1-hour time frame. I said that this would play out like this because we came to this imbalance. I did my market outlook yesterday, which is free on YouTube, and I said we start accumulating here. We just respected this imbalance. So what are we going to do? We're going to come up, take out the high, like after respecting that imbalance, and come back to the imbalance, and either respect it and continue up or disrespect it, which looks like we've done. We've disrespected it and pushed all the way down, took out these lows over here, and now we retrace next. Next, we retrace to the imbalance. It's literally as simple as that. Now, what I want to focus on is this trading opportunity here, and I want to talk about why I did not take this. This is the exact, like, this is a perfect setup I would usually take all the time with AMD, with IFEGs, simply just because we've had great price structure coming up. You know, we've had the speed bumps, we've had ups, downs, and then we kind of chilled around here, and then we formed the IFEG after taking out the high. So I just want to recap that. We have nice, clean price action. We then take out this high here, form an imbalance, disrespect it. So what you do, you target the lows. This would be the low here, and this would be the low over here as well, which I was looking to target. But the candle that formed this IFEG was this one right here. So this would be the entry. And, you know, my TP would be like maybe down here, but realistically, I think I was targeting this area, and it would not have played out nicely. It was a 0.3R trade. That's why I didn't take that. Although we had amazing price structure, we had an easy trade. We had the high, we had them balanced, then we formed an IFEG very quickly in 6 candles or less. That's the target. And then, yeah. And another issue as well is the fact we took out this low. Once we take out that low, what do? We retrace to an imbalance and continue down. But we just kind of pushed straight down off of that, targeting this low, targeting this low, and now it looks like we might be starting to retrace. So we can really look for buys here. This is what I'd want to do here. I'd want to look for buys simply just because we've took out some lows which you were retracements, and we've got a massive imbalance here, which it looks like we've respected the discount zone on. But where's the nearest imbalance? This is the nearest imbalance right here. So we can look for buys if price, you know, lines up, if we get some good price action. The only issue is we've had a massive displacement to the downside, and that's not good price action. When you're trading IFEGs, what you want to see is price action like this, and then speed bumps, and then the IFEG form, and then the move down. That's what you'd want to trade, because we have all this institutional liquidity underneath those lows, like we do right over here. We have all this liquidity resting here, here, and underneath these lows as well. Whereas if we do something like this, you know, we come up all the way, form a bunch of fair value gaps. Very, very unreliable, because we just retrace and just continue the trend. To form a higher time frame structure that looks like this. So because we've done that, but obviously to the downside, I don't really want to trade it much. Like we'd want to see better price action, stuff like this, stuff like this, and stuff like this. That's what we'd want to see before trading the IFEGs. That's just the way it works. But we can look for buys if price aligns on the 5-minute and stuff like that. So this is simply just the 1 hour. It's going to take hours to form price structure like that. So we can look at getting a retracement on the 1 hour up to this fair value gap over here. So let's move to the 5-minute time frame. Now we've got that out the way. We don't really have any fair value gaps to disrespect, as you can see. Like, this is the target up here, and look at what price is doing. We got good price action. We could even take sells, I guess, if we form a fair value gap here. But the only issue is we don't have any bearish price action. We don't have any bearish fair value gap, sorry. If we just look at this to the left-hand side, you can see we got this one here, respected, this one here, respected, this one, respected. And then in this move down, after all that, we didn't really form any. Like, we had this very small one right here, but that's not what you want to trade. So because of that, we don't really have any good setups, guys. That's basically what I'm saying. On GJ, we don't really have any good setups at the moment. It's been PPI. We've pushed to the downside off of that, although I don't think it did much. This was the PPI release. That was the PPI release. This candle here was the PPI release. If we look at the 15, it does push down a little bit more, but we have not got any good price structure here. So I don't really want to trade this. We could look at taking sells, though. That wouldn't be an issue. We got this imbalance right here. If we take out this high, which it looks like we have done, validate this fair value gap, then inverse it and close like just before this low, like close like right here, we can then look at taking sells, something like this, and that would make perfect sense as well, guys. I guess this is probably the best setup we could look for today. But as I said, it's a chill stream. Like, you know, we don't need to force anything. It's PPI day. You know, there's not really much to force here. So what I'd say is be careful. Risk how much you usually risk. Risk like an appropriate amount per trade. Make sure you're journaling the trade. And talking about journals, I want to just look. Okay. I want to just look at the fast track stream journal. This is the journal that basically I put all my trades in. We launched it last week, and these are the trades that we have been taking so far. We've had 5 wins, 1 loss, and 2 break-even trades. So far this week, we are break-even. You know, so like it could go either way really this week. So I don't really want to force anything. I want to take the best possible setups, and I said this, I think I've said this all week as well, guys. Like, Friday does look the best. If you look at Friday's fundamentals, it looks the best. We've just had CPI, we've just had PPI. We're going to continue in the direction that we formed from those pieces of news. And I think both seem to be a bit mixed. Bit bullish, one mix. But on Friday, tomorrow, we have one big piece of GBP news at 7 in the morning. And that's pretty much it. And I think we will have a good day tomorrow. I think hopefully we can catch some trades tomorrow. But as I said, like, we've took out this high now. If this closes like this and we validate this fair value gap, we can look at taking sells off of this, and that would make perfect sense as well. To come down here and just kind of continue that, but it's not the best setup. It would be all right. I'll take it, but you know, not the best setup. Now let's move on to Bitcoin now, guys. If you learned something, if you're learning something, like up the stream. All the YouTube business. If you're new here, you know, subscribe, click the bell, get notified whenever I go live. But what's happened on Bitcoin? Let's see. So in yesterday's stream, I said if we inverse this, we're going to continue up to the high. And we just came and took the high, like literally the same day. So this kind of invalidates it all. Like if we closed down here, yeah, if we closed here, you would go, all right, we're probably going to push up, you know, to take out this high. But we did that in the same day that we inversed this. So now we're back to being bearish. Now we're due a retracement. And it looks like we may have had that retracement, but the daily is saying bearish. So what's the 1 hour saying? Let's just look at that. The 1 hour is consolidating. We've got good price action here to take an IFVG trade. Let's just mark the previous high, which is this one up here now. So, actually, sorry. I think it might be this one. Let's just see. Go back to the daily. All right, so we got that. I'd want to see price take out this high here. So if we go back to the 1 hour, what I'd want to see, right, is price take out these highs in the manipulation, form a fair value gap, inverse it on its way back down, then we take the entry, and then we can trade back down to this imbalance here. This is probably, and this would be the target here. And that would make sense as well on the 1 hour time frame. But as I said, like the 1 hour time frame, it takes a few hours to play out. So what we can do, if we're going to look for any trades on this, it would probably just be sells, but it's a little bit risky because of that setup I've just spoken about. It could be coming into play. But let's see what the 5 minutes says. So the 5 minutes consolidating as well, which is a good setup, I guess. If we inverse this, we could target that liquidity up there. You see this fair value gap right here. If we inverse that, we just took out this low. We've come to this bearish fair value gap we formed, taking out that low. Exactly how I said ERL and IRL forms, guys. Literally. Hey, Rodrigo, how's it going? And Humphreys, yes, I will share the journal template. I think it's in the free course, actually. I think it's in the free course. I think I do a video on journaling trades. I'm not 100% sure, but if not, I'll make sure it is. So keep an eye out for that, Humphreys, if you're interested. But what you could do, if you really want to, you could literally just download this, Humphreys, and then you could download this and just basically get rid of it all. Like just delete all this, all the information that's inside it, and then you can fill it out yourself. If you really want to do that, you can do. I think View allows you to download, because I think most people have View access. Yeah, they are viewers. So you got View access. You should be able to download it if you want to, and then just edit it. But all-time highs. So I trade IFVGs and AMD. It basically, they come in hand. So some of my trades are AMD, as you can see, and some of them are IFVGs. Now, these two come hand in hand because the best IFVG setups, the best ones form with AMD. Sorry, excuse me. So when we accumulate, which is AMD, we accumulate, manipulate, and distribute. When we accumulate, we generate liquidity. When we manipulate, we're taking out all this liquidity and then forming a fair value gap, typically during the manipulation phase. Then you look for price to basically disrespect that fair value gap, and that would be your distribution entry or candlestick pattern, typically as well. So I trade AMD, I trade IFVGs. Like sometimes I trade them separately, but the best AMD setups come with IFVGs, and the best IFVG setups come with AMD. So to answer your question, it's AMD and IFVGs. It's like ICT. Looks like we're disrespecting this fair value gap here. We have just closed outside of it. A bit of a rough target, I guess. You know, and our stop loss would go below here. It's not really worth it at all. We could take this, though. We could take this setup. We took out these lows, inverse this, we'd target the highs, and that would be a break even. I think if price comes back down, I might take half on this, guys. Price has just disrespected this. Price action's alright. Would look for that manipulation. Very quickly, what's the 15 saying? 15 has just took out the highs. Retraced to an imbalance in that 15 minutes and respected it. And then equal highs up here. Okay, let's take this. All right, let's take this, guys. Break even here. I'm going to just draw this out. This is where we look to go break even. We've got equal highs right here. TP 102. 087. stop loss will be just below this candle here, which is 100,594. And 65p. We're going to go break even on this now. I think I got in around about here. Looking to target these highs up here. We're going to go break even here. I think I'll go break even and close half on this one, I think. And partials. So I'm going to close, I might just close half of it when we hit that level. Those equal highs made me want to get in that trade very quickly. I knew we were going to come up and take those. We've got the 5-minute IFVG set up exactly how we look. We've got perfect price action all down here. Looks like we might be continuing the distribution. We've retraced after taking the highs, come down to an imbalance here, respected that imbalance, pushed all the way back up, looking to take out these equal highs now. Yes, the fair value gap is on the 5-min right here. It's a BPR, but more importantly, we're focusing on that bearish fair value gap that's been inversed very quickly. Now we're looking to take partials, close break even at this liquidity up here, which is equal highs, as you can see here and over here. We're looking to close break even there. Come on. Close, take partials, sorry, not close break even, move break even and take partials there. Whilst this plays out, I'm going to set an alert right here. And we're just going to move on to something else for now. I get a notification when we push through. So this is exactly what I mean. This is a perfect example of a bad scenario, a bad trade to take, because we've got all this massive move down. We've got a massive displacement to the downside. We've got like 3 fair value gaps here, back to back to back. So if we inverse this one, it's not the best sign that we're going to continue up, because we got all this in our way as well. But yeah, if we go to a higher time frame, if we go to like the 1 hour, you can see that we do have 2 imbalances here potentially forming. We got the 1 secured, 4 hour as well, we'll say just the 1 up here. So all these higher time frames are basically contradicting this entire move, because we could have like, oh, okay, we're already crossing. We could have price pushing all the way up, only coming to, you know, the premium zone on a bearish fair value gap. But we're gonna just close some of this here. Okay. So we took those equal highs out now. Locked in 1/4%. The reason I'm locking in 1/4% here, guys, is simply just because it's coming to the end of the week and I want to secure a green week. But now we're moving to break even. I'm going to put a little bit just below break even, just, you know, to apply for like spread and stuff like that. But that would give us to 101,000. It's crazy how high Bitcoin is at the moment. There we go. So we're in the position now, about 0.5% up. I've secured like just over 1/4%. I'm hoping that we secure this fair value gap right here as well. If we can secure this fair value gap here, that gives us a little bit of a protection in our trade. You know, because then we'd have to invert this to continue down. It looks like we might be coming up to target these highs now. What I would not be surprised about is if we push up a little bit, you know, take out these highs, validate this fair value gap, then come back down to it and then continue up. That would be perfectly normal as well. So from here, I'm not going to manage anymore. I'm just going to leave it to play out. I'm going to set another alert up here for price, and we'll see what happens there. But as I said, we're going to let this play out now. We're break even. We've secured profits. We don't need to really stare at this. We can just go about our day and just carry on trading, carry on looking at other things. But it looks like we're respecting this 15 straight away from the candlestick pattern. Another thing as well, guys, when you see me trading and you see me, you know, the AMD setups that we'll see, and you'll see me looking for that candlestick pattern inside a fair value gap. So we look for AMD to manipulate up into a fair value gap on the, like that. Let's say, right, I look on the 15. We'll look for 1 hour fair value gaps. So we look for 15-minute AMD, 1 hour fair value gaps. And the reason I get you to look for candlestick patterns on the 15, the same time frame you identify AMD on, is because that's a very strong sign we're going to respect a fair value gap. Now, no one really knows if we're going to respect an imbalance until we've done it. Like, no one really knows ever. It's either respected or disrespected. Now, what you can do is have some form of, you know, we have this, we have, okay, we come into the premium zone, we come into the discount zone, that's the best place, blah, 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 blah. No one really knows. It's all just a guessing game. But what actually helps us have an idea of that is that near enough every single time we do respect a fair value gap, we will form the same candlestick pattern. Like, near enough every single time we respect an imbalance, we will near enough every single time form this candlestick pattern. So it's like 90% of the time we respect them, let's say, 90% of the time we form this candlestick pattern. Do you understand me? So it's like 45% of the time, I think, something like that, we will form this candlestick pattern when respecting the imbalance. Which is, so the 45% odds. But anyway, what I'm saying, that's hypothetical. So what we will do is form a candlestick pattern. That's why I get you to form, or wait to form, sorry, I'm messing up my speech here. This is why I get you to wait to form the candlestick pattern before taking the entry. This is exactly what it would look like. We manipulate down into a higher time frame fair value gap, form that candlestick pattern, and then move to the upside. And that's a perfect example right here. You can see this 15-minute fair value gap, but if we go to the 5-minute, you can see the candlestick pattern that I always get you to look for. And the reason this candlestick pattern works so well is simply just because it is also the sign of an IFVG. Because for this to be a valid candlestick pattern right here, we'd have to close at least half of this range here. Now, that's not like a specific rule. It's kind of a rule of thumb. It's a guideline, I guess, not a specific rule. But typically, when you see price accumulate, then manipulate to the upside into a higher time frame fair value gap, you'll see an evening star candlestick pattern, which will also form an IFVG. And then you take your entry there. Stops just above here, liquidity 1, liquidity 2. TP at a previous low. And the reason this would work out so well is because we have that low. So what does price do here? Okay, what do we do here? We take out this low. Yeah, this is liquidity right here. We've got liquidity right here. Then what do? We go from ERL, which is the low, to IRL, which is the fair value gap. We come to we come down, take the low, consolidate, manipulate up to the fair value gap, show signs we're going to respect it with that candlestick pattern, form the IFVG, and then you target the previous low, which is sometimes just a little bit below the AMD, the accumulation. And that's the best type of setups you will see. And when you see price play out like that, you could risk a little bit more than usual, because these are the best types of setups. Because one, we've took the low, come to the imbalance, which is a fresh imbalance. You want a fresh one to form, a fresh imbalance. Form the candlestick pattern, which shows sign we're going to respect it. Yeah. And what you do when you respect IRL, you go to the high, you continue the trend. So what do you do there? You target the low, the previous low, where there's what? Liquidity. What do we do after that? We come back to the imbalance and either respect it and continue down, or disrespect it and continue up. So that is why you target the liquidity, which is the low, and you take your entry off a fresh fair value gap after forming the low. And these are the best types of setups you will see in the market. When we take the low, consolidate, manipulate up or down to a fresh imbalance. In this case, we take the low, consolidate, manipulate up to a fresh imbalance, form that candlestick pattern, which is this one right here, which shows signs we're going to respect the imbalance, form the IFVG as well as the candlestick pattern, 2 in 1 really, and then take the sells, manage at the other range of the other side of the accumulation range, and TP at the previous low, because that's where liquidity is. And what does price do once it takes the liquidity? It then retraces and either respects, continues down, or it will disrespect and continue up. So they're the best types of setups you'll see in the market, guys. With AMD and IFVGs, you will see highs taken, then fresh imbalances formed, then accumulations, then manipulations and distributions to the previous highs and lows and stuff like that. That's the lecture done. Let's go look at Bitcoin. Let's see what Bitcoin's saying. So Bitcoin has done what? It has formed this imbalance. Looks like it's retracing back to it after taking out these highs. May or may not respect it. If it does, it will continue to take out these highs, retrace, and just so on, so forth. Literally simple as that. But yeah, I wanted to secure a little bit of partials here, just so we can end the week green if we don't take a trade tomorrow. And we're break even now. So worst case scenario, we're up 0.25%, which isn't the best, but you know, it's better than nothing, I guess. Looks like we're coming into that imbalance now. Let's see if we respect it or disrespect it. We took out the previous low there, and then we got a little bit of a move off of it. This is what I mean when I say markets are fractal as well, guys. This right here, this candle right here, is also a previous low on a lower time frame. We've just took that out, and what have we done? We've retraced here. Very, very simple. Looks like we may have disrespected the imbalance that's formed on the 1 minute, so we may even come up and take out these highs, or we may just chill around, and there may be a bunch of imbalances here for us to respect. Hence why it wouldn't be a good IFVG setup. But we may end up taking out the highs now. We'll see how that goes. But please, what time frame do you basically look for your fair value gaps? Well, it depends on the setup. It depends on the market structure. If we're looking for an AMD setup, I look for a higher time frame one, depending on what time frame. I use the 15 for AMD, the 1 hour for the fair value gap when I'm using the AMD setup. On this, I look for the 5 minute. So there's no specific rule. I look on the 1 hour, the 15, and the 5, and the daily and the 4 hour for my fair value gaps. And there we go, guys. What did we do? We come up and took the highs exactly how I said we would. Now we've took the highs. What are we doing? We're retracing. It's literally fractal, guys. Like, there we go. We may or may not have just come down to the imbalance on a very low time frame. Respected it. Let's see if we can get that. Can we get this? Yeah, we can. We cannot. You have to pay more. Where you can see that we took this low, came to the imbalance, like in this candlestick, right, that just formed. Then we came to the low, took out the low, came to a very low time frame imbalance, disrespected it, so we went up to the highs, then came back to the imbalance we formed on our way to take this high, respected it, and continued up. You've seen that play out. You could see it in the candle. I said it would happen, guys, 30 seconds before it happened. But yeah, let's see how this trade goes. Looks like we may have respected that imbalance. We may retest it. I hope we don't. Like, we continue, obviously, but yeah, let's see how this trade goes. Like the video, guys, if you learned something new. I hope to see you all in tomorrow's stream. We're going to see how this trade plays out. Someone asked, please, I'm new to trading. Should I start with prop firms or deposit real money? I think I've messed up with the chat box too, guys, because now you can see the chat box perfectly. That's great. So, neither of those things. Shalom FX. Please, I'm new to trading. Should I start with prop firms or deposit real money? Well, you got a few scenarios here, okay? Let's say you start with $1,000, yeah? You start with $1,000, and that's great. Or you could pay $100 and then get access to a 10k account. Which one sounds more reasonable to you? Risking 1,000 of your own dollars for $1,000 account, or risking $100 of your own dollars for a $10,000 account? Obviously, you would do this. But if you're new to trading, you shouldn't do either. Really, you should not do either of those things. My advice to you, Shalom FX, if you're new to trading, start with a demo account. Start with a demo. Learn a strategy. Open a demo account, find one mentor, learn their strategy, because what I used to do as well is I would scroll through reels and find all these different guys who trade differently, then take this guy's tool, this guy's tool, this tool, this tool, this tool, try and squash them all together, and then see what comes out of it. And it never, ever ends well. So what I would say to that is start with a demo account, find one mentor and stick to them. Then, once you've found profitability on a demo account, take 100 of your own dollars and buy a $10,000 account and trade on that. Try and pass the challenge and stuff like that. Then, get all your payouts, all the dollars in payouts. Once you're sustainable, you'll get so many. And then scale and just repeat this cycle and then do this. So you get $100. Yeah, okay, right. You start on a demo account. Once you're profitable, use $100, get a $10,000 account, then use the payouts from that to buy more funded accounts, equal more capital to trade with, equals bigger payouts, equals more accounts, equals higher money, equals more payouts, equals more prop firms, challenges, and just grow your portfolio. That's what I would recommend you do. So if you're new to trading, start here. Then make your way over to here once you're profitable. Get the 10k account. It may take a few attempts. So it may take $300 to get a 10k account because you'll have to take 3 challenges. Do those challenges, pass, and then my advice would secure the payouts. Use them as a stepping stone to buy more, collect more money, buy more accounts, collect more money, and then eventually you'll have a big sack of dollars. That looks more like an 8. More dollars. You'll have a big sack of dollars here. And with those dollars, use them to fund your own account. That's my advice. Bitcoin has completely reversed after taking out those highs. Looks like we may get stopped out now, but we have secured the W regardless. There we are. We just got stopped out of this trade. We took the highs, and that's how you trade. You execute the strategy. You take the highs, you then form an imbalance after taking the highs. Either respect it and continue up, or disrespect it and continue down. If we wanted to, really, we could look at taking a sell position down to this low now, but we're out the trade, guys. I secured 0.25%, lost nothing. So now we're going to journal this. It wasn't really partials, was it? It was 50%. Right. Let's do this. So we closed it around about here. Where was our original stop loss? Our original stop loss was just below here, I think. So we have a 12th of the 12th 24. What did we trade? Bitcoin, didn't we? Bitcoin. What was the bias on Bitcoin? I forgot. Bias was bearish, I think. Or was it bullish to take out those highs? It was mixed, I'd say. And we did take a buy with an average. The R of the trade was higher than this, but the fact we closed here, we have to kind of journal a little bit differently. So we took a 0.5 R from this. literally the same as this one, near enough. It was a win, and it was an IFEG model. Decent setup. Set up ERL to ERL. Other notes: closed early or closed. Took partials at high. Made 0.25%. Now let's just put a risk. Oops, sorry. Now let's put a link in of the chart. Yeah, it looks like it was the right thing to do there. But see, it's all just ERL and IRL. We take the high, like we inverse this, come up to take the high, then formed an imbalance, inverse this one, come down to take the low, and we'll leave behind an imbalance which will either respect or disrespect. It's literally so simple. But let's just do this. Then we put this in here. There we go. And that's the trade. So 1.5R average, 90% win rate so far. Gustavo, I will talk to you at 6:30 on our call later, and I'll show you it then. But honestly, Gustavo, like, there's no point me explaining it, because where you are in your trading with your AMD, with your fair value gaps, you don't need to learn more tools. You need to learn to apply what you've already learned properly before we continue. So what I'd say to that is, no, I'm not going to show you ERL simply just because it would just confuse you, and you'll apply it. You might apply it right, but it's not going to benefit you at all. You need to know exactly where you are in your trading, and I know exactly where you are in your trading. I have a good idea, and yeah, I'll talk to you more about that on our call though in a few hours. But yeah, so yeah, guys, I think that pretty much is the stream. We took the trade. It didn't really play out. I'm gonna have a quick look at gold, a quick look at the other stuff. I can't remember this. I cannot remember this at all. Looks like we pushed through this, inversed it, and it looks like we may be coming down to the low. But as I said, I think I wanted to take the entry. I completely forgot about this trade. I wanted to take the entry, but I wanted to close above here first. We didn't close above it, so I didn't really miss anything here, but it looks like it may have played out anyway. But yeah, guys, as I said, that's the end of the stream. I've got nothing else to share now. If you want to catch more of this, if you want to learn more, go to the first link in the description, or one of the first links, join my free Discord, or join Fast Track Trading today. If you join my free Discord, there's a free course for you in there. It gives you a taste of what's inside the actual Fast Track course. If you want to learn more about ERL and IRL, go to one of my videos on my Instagram, comment liquidity, and I will send you a full PDF guide right now for free. Other than that, guys, I've got nothing else to share. If you've learned something new today, please appreciate it if you drop me a like. Make sure I see you in tomorrow's stream. It's a good day fundamentally, so we should be able to catch some actual consistent trades. It's been very hard to navigate this week, so I'm happy to walk away with this from this week with a little bit of profit. Very hard to maneuver. I know a lot of traders are in red this week. Not any of my traders though. Not anyone in Fast Track Trading. Other than that, guys, I'll see you guys tomorrow. Take care.